Hello everyone and welcome to another presentation with Global Beta Trading. This is of course the presentation from the psychology of trading, and today's topic is do not do what 95% of traders do. Apparently this kind of presentations is very popular among the beginner traders and the traders that lost some money trading, and they want to come back to trading and be more successful. So as my second slide, I'm going to show you of course the disclaimer that I will always show on any presentation or over the internet, and we are going to start our meeting with the quotation from Alexander Elder that goes, "The goals of successful traders is to make the best trades. Money is secondary," which is apparently in opposite of what you might think that trading is about. You think that trading is about making money. Well, it's not about making money, it's about making the best trades, because money will eventually come with the best trades. But that's the topic for another meeting. So let's go back to our agenda. Basically, we are going to focus on something that is kind of important for the beginner traders, because to be in the top 5% of traders that are making money consistently, that are successful traders, right? Do what the bottom 95% won't do. So you need to switch your behavior. You need to learn new ways to behave, basically, on the market that is not really applicable in the everyday life. So first thing is that we are going to talk a little bit about the answer to the question, why do you what is the main reason why only a small percentage of people end up wealthy in this world, basically. And then of course we will show you the list of the most popular mistakes, popular behaviors, popular kind of a way of thinking and mental frames that beginners traders have, and those who are losing permanently on during the trading activity. So I think it's like 95% at least what they really have in common. And then of course I will speak about a little bit how to avoid this kind of things. So if this is the first time you are watching my presentation, please be aware of the fact that this sentence you see on the slide right now is my main focus. That's behind of the series of these presentations. One of the biggest hurdles you have to overcome as a trader is staying in the market long enough that you understand the market mechanisms, and that your psyche, your learned and habitual reactions are no longer your enemy. This is why I'm making these presentations with cooperation of the Global BD Trading Company. And of course, every topic I choose for the presentation is somehow related to this sentence that you see here today. We will of course be talking about the learned and habitual reactions again. Mistakes are unavoidable, so you cannot avoid them. You will make them as a beginner trader. It doesn't really it applies to everyone who is trying to make money on markets will make mistakes. Even the most advanced successful traders make mistakes, but the approach to mistakes is different by beginners and professionals, right? You need to learn from these mistakes and figure out how to stop committing them over and over. That's the thing, okay? That's the thing in avoiding the mistakes you make. Make your lesson. as they say here. And exactly the question that goes, what's the main reason why only small percentage of people end up wealthy in this world? That question was asked by the beginner trader. He even started to trade yet. He just asked me these questions. What do I think? Because we were talking about different things, and it's not directly related to the to trading activity, but I guess those things have a very in common. It's a loaded questions. It could take a while to answer, but the main answer, the simplest answer is that most people are just not mentally prepared to do what it takes consistently and with discipline to become wealthy. And it's the same exact way in trading, basically. Most traders end up losing. Just like the most people end up staying middle to low class, doing their 9 to 5 job, economically speaking, right? The reasons why are very, very similar for the most part are like this. When you exclude variables, chaotic variables that really are not fair. Okay, so I'm talking about being born in an economically depressed part of the world, or being born with a severe physical or mental handicap. Okay, the primary reasons why 95% of people fail at things like trading and business and wealth creation are pretty much the same across the board. So, what do the top 5% of traders do differently from you? First thing is, the top 5%, I guarantee you, are staying in trades much longer than you are. Because as a beginner, you want to trade everything, you want to trade as much as you can, you want to trade different markets, different time frames, you want to make money because you think that the more you trade, more money you will make. It's a classic mistakes, and you are not using time for your average, for your advantage, and you are using a stop loss, of course, but you are not using it properly and intelligently. You are using it in a, as I call it, in a greed way, right? So use time to your advantage in the markets, basically. Okay, don't be anxious to close trades too early. Let them ride and give yourself a chance to catch a big move in the market that will net you some serious profits. This is partially how the 5% of traders got to where they are. Okay, they catch big move with a good risk to reward ratio. And the other thing is, properly placing your stop loss is another key factor that can break you as a trader or not. Certainly, the top 5% of traders have mastered the art and the skill of stop loss placement, and you will have to do this as well. Perhaps the most helpful piece of advice I can give you right now on this matter is to use a wider stop loss. Basically, the wider stop loss than you think you should use. Okay, most of the time, traders have the right idea of market direction, they have the right setup, they have the they pick a good entry signal, but their stop is too tight and it gets hit just from the natural daily price fluctuations that happen, basically, right? So the key is to place your stop outside these daily price ranges and beyond or above nearby key levels. That's the first thing, the technical thing that you need to change in order to do what 95% of traders don't. Trade with clean charts and focus on correct time frame data. Traders who are making consistent money over a period of years, not just few lucky months or few lucky weeks, for example, know that in order to see the most accurate view of the market, you need to focus on clean end of the day charts. That means they are focusing on the higher time frame charts, mainly the daily time frame, and they are primarily using that time frame and that time frame's price action data to make their trading decisions and to see spot trading setups. You will be very hard pressed to find any long-term successful traders who solely look at the short-term time frames and scalp them. Right? Scalping or day trading is advanced way of trading that requires special special things to be made. Okay, special personality traits, special way of thinking, special mental skills, special set of a behavior skills will not you as a beginner trader are not ready to be a day trader. Basically, you can make plenty of money day trading or scalping, of course you can, but for the beginners it's not really the recommended way to start the trading activity, because most likely you are basically not prepared to do this. It's a fool's game, and it makes the entire process much more difficult, time consuming, and stressful for you, basically. All right, so you need to know how to perform a multi-time frame analysis, and of course use clean end of the day charts to trade and to see the trading setups. Utilize a clear arsenal of trading strategies. Professional traders know exactly what they are looking for in the markets. They have a defined set of setups of trading strategies, and they wait patiently for things to line up just right for their entry signal to form. You must have a clear arsenal of trading strategies to succeed. You cannot just wing it and you think it, I will figure it out, and okay, let's just buy this or sell that and we will see what will happen. All you will figure out is that you were wrong and you lost money. All right, you need to make a trading plan that includes printouts of the best setups that you are looking for. 95% of traders do not have a trading plan, and they do not make trading plan, which is why they lose money, because they are trading chaotically in random time frame charts. So if you are if you want to be much more successful in your trading, you need to be more patient. You need to wait for the signal according to your trading plan. Okay, and of course you need to apply correct risk and reward per trade. Right, top 5% of trades got to this position because they understand the risk to reward ratio. Okay, they understand the math behind risk reward ratio, and also how to practically make it work by placing their stops and targets properly. They try it on the demo accounts with demo money. They even before they just pull the trigger and buy or sell some kind of a class of assets, they try on different assets on the demo money just to see what is the correct risk to reward ratio on particular trade, on particular asset, and then when they have it ready, then they do the same thing if they can on the trading account. This is why you should use demo money on demo account, not to trade every day on this account, because of course it doesn't make sense if you make money on demo account or not, unless you find a broker that will give you money for trading on demo, of course. But this is only solely for the back testing or for the applying correct risk to reward ratio. Part of the risk to reward is actually realizing the risk reward, and you do that by letting the trades play out without you constantly interfering with them. Yeah, because 95% of the traders is babysitting their trades, or they're changing something, stop loss, they're changing level, take profit level, trailing stop, they're changing everything if they can, because they still have the time, they still have the abilities to do this, and they are sitting in the front of the computers all the time just to babysit their trades. When you learn to apply this the set and forget approach to your trades, you will start seeing your trading performance improve slowly but surely. Okay, look for the confluence, because anytime you have multiple factors of confluence in a trade, it adds weight, or it adds importance to that trade setup, meaning it should have at least slightly higher chance of working out in your favor. All right, professional traders know that they need to tilt the odds in their favor, and one way to they do this is by knowing what pieces of, let's say, evidence or clues on the charts constitute the confluence, and then waiting for those things to come together to form a high probability entry setup. Okay, essentially you want to find as much technical chart evidence as possible to back up the trade. You need to look for reasons why your trade should work out. If you want to buy, for example, maybe you should look for oversold market conditions, for the support, for some kind of a candlestick patterns, and you have three let's say three factors that influence your setup and that might tilt the odds for a successful trade in your favor, of course. So that's another thing. 95% of traders is using only one factor. They are not looking for confluence of different factors. They are just looking for one factor, and they trade accordingly to this single factor, as they call it, for the signal that is only that is not backed up by any other signals, for example, right? This is what I mean. Thinking and acting properly in the market, very important thing, because how you think and act in the market are the two overreaching things that determine whether or not you will make money over the long run. You cannot become overly emotional about your trades, nor can you allow yourself to become overly influenced by the most recent trades results. Right? We have the God syndrome, or like a recency bias I spoke about in the previous videos. Part of thinking and acting properly in the market is trusting yourself and remaining cool, calm, disciplined, and confident, even in the face of the constant temptation and adversity that is trading. The top 5% of traders have thought and acted properly for so long in the markets that they have developed a sort of intuition, or you can call it sixth sense or whatever, in regards to trading intuition, for example, and this kind of good feel in the market, which is a result of years of thinking properly about markets and acting properly within them. All right, so this is a long-term business, and you should write a daily or a weekly market summary or journal of trades in order to become one of the top of 5% of traders, right? You need to get in tune, in harmony with the market, so that you can get a feel for what has happened, what is happening, and what might happen next. So this is what I call reading the market like a book, like an open book even. Once you start writing a daily summary of your favorite charts, for example, the charts will start to make much more sense to you. You will be following the footprint of the money, because the chart basically speaks to you. Basically, it speaks to you, and it's showing you everything you really need to know to get starting this daily journaling or commentary or summary of the markets will take you trading to an entirely new level, and you will get more familiar with yourself. You will get the resources needed for you to work with yourself and to master your own reactions when interfering with markets. And that's the key to the successful trading, because you need to treat trading like a business, right? Professional traders treat their trading career like a business because it has costs, it has expenses like losses, computer equipment, internet data, whatever, and it has revenues like winning trades, of course, profits. Just as with any business, you make profit when your revenue is larger than your expenses. Simple as that. Sadly, for most of the bottom 95% of traders, their expenses get far too big due to the losing too much money from risking too much, trading too much, and or not knowing what they are doing, basically doing things chaotically. You need to start treating your trading like a business by doing the things that are typical for running a business. So treat this activity, a trading activity, like a typical business, with a business plan, with the targets for the month, with the targets for the quarter, for the yearly targets, and so on and so on. This will make your trading a little bit easier than you think. All right. Get knocked down and get right back up. Right. If you want to be a successful trader, I suggest you to watch the Rocky movies, because the way the Rocky took a beating and just keep getting up and coming back to fight more is exactly what you have to do in the markets, right? You are going to have losses. You are going to have winners that had you let them run longer would have been huge winners. You are going to have trades that just barely miss your target and turn around and stop you out. You are going to have a lot of near misses and losses as a trader, but if you let those get to you and you get emotional about them, you are done. You have to be able to get right back on the horse and stay cool and calm, disciplined. If you feel like you can't do that, then take some time off from the charts, from the markets, until you are calmed down. You can't get afraid, or can't get mad, or just can't get frustrated, or can't get sad just because you lost a trade. You've got to be able to get knocked down and then get right back up unharmed, mentally unharmed, and ready to go mentally, basically, right? So this is another thing that 5% of traders can do, and the rest simply give up, right? This is what they cannot do. The conclusion for this presentation is very, very simple. Perhaps above all else, the top 5% of traders understand that self-master is the road to mastering the markets. Ironically, the market is not something anyone can master. All you can do is master yourself. And then you will begin to see your trading improve. How do you do this for the beginning? Let's just expand this topic a little bit. How do you master yourself? Well, start by accepting you are not perfect. You have flaws, you make mistakes, just like everyone else in this world. And those flaws, those mistakes mean you are human, and humans do very, very stupid things in the market just due to how we are wired, basically mentally and behaviorally. However, through ongoing trading education, which is pretty good beginning for example, watching this video, it's pretty good beginning, being open-minded and not accepting failure as an option, you will have the real chance to move up from the bottom 95% of traders into the converted 5% group. Remember, there is no holy grail to trading success. There is only mastering yourself, sticking to the plan and your targets and your goals, and doing whatever it takes to achieve it with discipline and with mental strength. And this is my conclusion for this presentation. Thank you very much for watching this presentation. And if you would like to contact the Global BD Trading group, you can do it by various means. You have a address, you have the email, web page, Facebook page, and of course a Twitter account. So if you are around, please come in and see what the Global BD Trading company is doing. Basically, it's a proprietary trading firm that trades on the US stock markets. Thank you very much for watching this presentation, and I hope I see you guys next time. So take care and bye bye.